We are the Matea Group of Keller Williams Realty. We enjoy the diverse community that we serve and the lifestyle that Maine has to offer. We'll be talking all things real estate and Maine. Welcome to the Maine Real Estate Show.
Start to dive into the market for buyers right now, because what you're talking about, Skylar, is a big piece of what we're seeing in the marketplace. So to kind of flip to you here for a minute, Jeff, that financing, we always talk about, first step needs to be get your finances in order, go through that process. But in your opinion, as a buyer, does the type of financing and the lender you're using, how critical is that right now?
Well, the lender most especially, you see pre-approval letters come through and you're like, who's that? Or hey, like like I just told the folks on the phone that you heard, is a seller wants to know with certainty it's going to close. Mm-hmm. That's where they start from. And then are there any contingencies? And if there are, what's the time frame? Like, how soon am I going to know this is a done deal? Because I want to know, can I pack, or, can I move mom and dad's stuff out, or I don't have to do anything after this, right? Like, we just sign and then we wait for our check. Is ideal. I think the type of financing, it all depends on the lender, but there are some products where maybe sellers or their real estate agents who maybe not as strong in the market or keen on the product may shy away from certain products. Mm-hmm. But with that has come the 3% down conventional, right? So your parents, grandparents were so used to the 20% down. Mm-hmm. That's kind of gone away. That there has been the 3, the 5, the 10%. And so I think sellers in the marketplace are getting more accustomed to, as long as the listing agent delivers it to the seller the right way, well, right, Mr. and Mrs. Seller, because money's so cheap to borrow, like a VA loan. I've had people say 100% financing. Well, right, the United States government and working with lenders rewards our servicemen and women for their service to our country. They may have money,
right? And
they just choose to borrow all of it. And as long as they can make the payment, what matters at the end of the day is, are you getting the purchase price you want, and is it going to close?
Right.
Otherwise, I don't care what someone's putting down for money.
And
I would choose to do a FHA loan at 3.5% if you could buy every property and investment property at 3.5% all day long.
Exactly.
It's just right. And Skylar can probably point to that.
VA one is, it bothers me so much because so many VA buyers are not getting accepted, but then they'll accept a conventional 3%.
Right.
That's the truth of it. A conventional 3% borrower, just the reality. First-time home buyer, thin work history usually because they're, a first-time home buyer, fresh out of college, whatever.
Right.
Probably borrowing the 3% of money from their parents, and doesn't have a lot of credit history because they're new, right? They're first-time home buyers. A veteran has guaranteed income usually. They are getting guaranteed fixed income. They have their retirement accounts all set up. This may be their first, second, third, fourth VA loan that they have. They're normally extremely organized, extremely diligent, they are the strongest buyers, not to mention the VA loan is the most forgiving with credit score, allows for the highest debt to income ratio, allows for the most lenient with underwriting. It is literally the strongest loan out there, with also having the lowest interest rate, no PMI, all of these things. Like, that borrower has earned the right to have that, right? So it's all about the education piece, like educating them that they have a heck of a lot more money than the conventional 3% down program. I'll tell you that, but I can't really say that, but that's what I'd like to say to people, is that just seeing 100% financing VA loan doesn't have anything to do with their ability. It just simply is that they've earned the right to have this loan program. And, I do believe as an agent, you have to be sure that the property qualifies, because that's the one hang up with the VA loan. If you're going to accept a conventional over VA, if the property has a lot of peeling paint and has some safety and hazard concerns, then go with the conventional, right? But if there are no hesitations with that, with the condition of the property, that VA borrower is guaranteed stronger than that conventional 3% borrower.
Yeah. So there needs to be more education around, like, whether it's CU classes or just even in the sales agent training course, because there's a couple of different ones, and it's just the perception, right? The market, the media, other agents have just kind of hammered this home, or for whatever reason, just like I can give 2 different examples. One, my seller presenting an offer, they didn't like that the buyer wanted seller to pay closing costs. At the end of the day, ma'am, it doesn't matter because it's purchase price minus the closing costs. Your proceeds is still a number.
Mm-hmm.
They're just choosing to finance their closing costs because they can. Or, right, maybe they're saving some money that they do have in the bank because they want to put it into improvements once it's their home. You've got to like think like the buyer here. At the end of the day, are you getting the net proceeds that you want?
Mm-hmm.
Yes or no, right? And so there's that. Then on the flip side, as representing buyers, because I can't guarantee that a listing agent will present this well to the seller on a VA loan or even like a lower money down loan, I have them come in with much stronger earnest money to say, I have it.
Me too.
Just choosing not to.
Right.
I'd rather borrow it all at 5, 6, 7%. Like who cares? I can make the payment. I'm pre-qualified for this purchase price and this payment. No questions asked. You're going to get your number. It doesn't matter what loan I choose.
Right. And the program is not necessarily like income specific in many cases. People realize that I can borrow money at 5% or go invest it at 8. I'd rather keep more of it invested at 8 than borrow and borrow more at 5. And it makes a lot of sense to their financial picture to maybe go with a lower down payment loan. But I think the point you're trying to make, Skylar, is whether they're coming in with a VA, a 3%, a 5%, a 20% down loan, it doesn't, the loan's not worse because the down payment amounts are different. It's the same package.
Yeah. Yeah. They have a debt to income ratio and a minimum credit score to qualify for that product.
And it doesn't take any longer to close a VA loan. It doesn't take any longer to close an FHA loan. It's not any, you know what I mean? Like that. And those are the things you have to keep in mind. Like if someone's putting 20% down, someone's putting 3% down, it's the same process, right? Like it doesn't matter. And that's where people get hung up a lot. It's like, oh gosh, this person is doing 3%, this person's doing 4%, but it's exactly the same. Who cares?
You know, I think it's in the market. It's just like experience matters. And especially in the skilled market, we have to remind the consumer that who you list your home with, who you work with as a buyer agent matters just as much as who the lender is that's representing the loan, the program for the buyer for your home. Because there's folks that don't know their products as well as Skylar. There's folks that just don't have the relationships. But then again, it's also certain lenders and financial institutions that have better relationships with appraisers and et cetera. So, I mean, I've made offers where Skylar's picked up the phone and called the listing agent to say, they're set there. So that provides that extra level of certainty that this is going to close. That's what sellers are looking for.
But
yes, I want a number, but I also want to know it's going to close. You can just throw something out at me and you can't close. What does it matter?
Right.
Exactly.
Totally true.
You earn that. Like I've been in this market a long time, so people know. Like if I call a listing agent, they're going to be like, "Oh, hey, Sky," you know what I mean? It's not like they're like, "Who is this 1-800 number?" And do I believe them? Right? It takes time to earn a reputation. Where like if I tell you it's going to close, like you'll hear from me a lot that I'm going to tell you throughout the process, but you're also going to know that it's going to be clear to close in 2 weeks, and you can sit back for the next 30 days and wait for it to close. Right? So it's all part of that, and it makes all the difference, and it makes all the difference with the agents. It makes all, and even when you said about the appraisals, like we work with a local appraisal management company. I can't tell you how many, like I'll get calls from people being like, I was working with this out of state lender and they couldn't get an appraisal for 8 weeks, and I'm like we haven't had an appraisal take over 10 days in like a year or more. You know what I mean? Like things are. We work with a local appraisal management company where I can pick up the phone and be like, hey, Bob, get an appraiser to go do it, right? Like that's the thing. And it makes a difference. And it's just a matter of like so many of these places, these 1-800 type numbers or big box companies are literally order takers. They could have been working at McDonald's last week, right? The reality is they could have been. Their job is to make a sale. They're not looking at the consumer as what is the best option for them? They're like, oh, you'd like an FHA loan? Let me put you into that for you. You know, that's the difference. That may not be their best option. I had a call this week. Actually, I'm working with them under contract now. Their lender was charging them over $9,000 in origination fees, processing fees, underwriting fees. And luckily, I knew their old agent in Florida, and she's like, hey, Skylar, you're up in Maine, right? I have a buyer that used to have a house here, and they just sent me their loan estimate, and they're getting charged over $9,000. The borrower had no idea. I not only got them a lower rate, but none of those fees, right? So people just don't know what they don't know. They've just like, oh yeah, I'll get you this rate, and it's costing $6,000 for that rate. It's ridiculous, and people just don't know. I just had one this morning, and they sent it over to me, and they're like, yep, I'm getting this, no points. Can you beat this? I look at the rate. I'm like, you do realize you're paying $4,800 for this rate? And she's like,
Wow.
oh no, they told me it was no points. I'm like, they're just calling it origination costs, which it is, but that's points. You don't have to
Yeah,
pay that.
it's costing you.
Right, exactly. You're paying for it.
Yeah,
You bought that right.
Yeah.
You know, there's $800 in fees here that you wouldn't have working with me. You know what? And people just don't know what they don't know. But also, if someone says, yep, I'm under contract with an FHA loan, I'm going through with this, and I look and I'm like, you have a 780 credit score, and you're buying this single family that's all these things. And they're like, I was like, why? And they're like, well, they told me I either had to do FHA or conventional 20%. I'm like, because those are the only products they have, right? That's the thing. It's like you don't have, I'm not trying to fit someone in a box, right? Like I'm not trying to stuff them in some box to fit my criteria. It's more like, how can we find what's the best option for you? And as a consumer, it's important to know your options.
Yeah. So as a buyer right now, obviously you've got, we were talking to buyers earlier about, how to present the offer, how to be strategic and try to put yourself in the best position. But in terms of multiple offers over asking price, we've been in that cycle now for a couple of years. Things got a little quieter there for a bit, but it seems like we're back to seing a lot of multiple offers and over asking price.
And it's back.
It's back. Yeah, it's definitely back. And yeah, it's stressful. Because it's like a guessing game too. I mean, you heard that call earlier.
Yeah.
Like, do you present your best offer right out of the gate? Do you kind of ease into it in hopes that they call you back? Oddly, different states have different processes. And in Maine, there's agents that just like, I assume that was your best offer, and they just go. They might not come back to 2 to 3, 4 people and say, well, you're awfully close. Is there anything you want to do one last time? And just to try to feel it out. So yeah, other states, apparently it's like you can make an offer and then they kind of go back and rally up a few more, and you can keep bidding until they pick one. And
then like buying on eBay.
And then there's kind of that sealed bid. And then there's the in-between where Maine, maybe you go back to a couple, or you have an offer deadline, but you can accept an offer before, or you can wait till the deadline and still kind of let showings happen. It's not the Wild West yet. It sometimes feels like, geez, how do you secure this property and don't cause your buyer to grossly overpay? Mm-hmm. They still want a home and they don't know that another one will come on. Is this the right, time to go for it? Do they wait? If they wait, then, interest rates could go all over, who knows, or prices could go up. So they don't want to miss out. So it's, that creating that urgency and just putting your best foot forward.
So is there a particular strategy you find is working better right now, or is it really dependent on the person and the property?
It's person and property dependent. I think at times I've had the upper hand in just the communication level, where I make sure that I communicate with the lender, so the lender is also talking to the listing agent, and then I'm just making sure that the expectations are set. Do you really want this property? Would you be disappointed or would you be devastated? So we better come in guns blazing, and not just on price, because I've actually won a number of offers where it was we weren't the highest offer price, and I also had a contingency, not just on inspection. We had to sell some properties, but I worked some magic and connected with the agent, explained why our person should get the home.
Gotcha. So as we've said many times, the terms of the contract still matter. It's not just a bidding war. It really is, back to the word we've been using, confidence. It's how confident is the seller it's going to close, and close in a manner that's acceptable to them.
Yeah, it's that certainty. And then I really, it's a skills market. I think it matters immensely who you have on your team, on your side, looking out to make sure that you get the home.
Okay. And so if a buyer were to approach you today and say, okay, I'm ready to go, I've got a pre-approval letter, let's do this. Yeah. What does that expectation setting look like right now in terms of what should they expect in terms of showings, turnaround times to be able to write an offer? What does that cycle look like right now?
We should see a house as soon as you can, being that's the best answer. And then, don't go and we want to sleep on it. It's have an idea in mind. You already saw this house at what it's listed for. expect to pay that, you might have to pay more, and be prepared. So I've called inspectors and already set tentative appointments to have the home inspected in a couple of days. So that's all set. So should our offer get accepted, we're ready to go. So we also show, right, we're serious. Earnest money. What money can you, if you're having a down payment, that in the next 30 days, you're putting a down payment towards a home, have that set aside. But also of that, is there a portion that you could do without for an extended period of time that would be held in escrow in a trust account that you don't need it in the next 2 to 3 weeks? Because we want to come in pretty strong. I think it's foolish people putting like $1,000 earnest money deposits. That's a number that you could walk on if you found a better home. To some, maybe that's a lot of money. To others, that's nothing. So we're coming in pretty strong on our earnest money. If you do an inspection, shortening that window, have it set up already. If you can waive inspection, just give it a very thorough look when you're at the property to budget for things that you may need to do. And then keep that in mind when you make your offer. Are there items that you just have to prepare for so you don't overextend and then, I've got to put money into this home and I don't want to be upside down or not be able to go out to eat or enjoy myself. I'm house poor now. So I just prepare everybody for that. Knowing like, is this where, I love to sell homes, yet I don't want you to call me in a year because you don't like this house. So are we going to stay for 3 to 5 years? Can you make the next cycle of 10 to 15? Where are you at in your world? So we're not upside down or in a position where you call me in a year or you don't call me in a year because I caused you to pay more than you should have for a home.
Gotcha. So, and you mentioned scheduling inspectors. So, should a buyer at this point in time be expecting that they can get an inspection? We're not back to the days of having to waive everything.
Yeah. A majority have gotten inspection in the last 30 days. You have to consider that depending on the style of home, the age of the home, condition, what you see in the disclosure, you may consider, and then your financial ability. Can you still afford this home and know, well, it might need a roof in 3 to 5 years. If something happens, you might need it even sooner than that, or the furnace is older, and just prepare. It's all just a budget process. Skylar will tell you, it's like you look at that monthly payment, but what percentage of that monthly payment is, am I able to set aside some money to save for a rainy day, or am I putting everything, now we can't go out to eat or go on vacation because that's my monthly payment.
I would say the biggest thing I'm seeing and the biggest question I'm getting pretty much from every person that I'm pre-qualifying is about appraisal gaps. So, that I would say is one of the biggest things. Is just like explaining as an agent, explaining what an appraisal gap is. But then on my side, they want to know okay, what does this mean for me with my financing, right? So if the appraisal were to come in lower than what you're offering, because what's happening is a lot of people are offering a lot over asking price. So if they're offering over asking price, that seller still wants to get what you're offering, right? And if the appraisal were to come in lower, they want to know that you're guaranteeing that you're going to either pay that price or a certain amount in between there. So on my side, what they'll say is okay, so what does this mean for me and for my financing? And what I can do on that is they'll say, let's say someone's putting 20% down, right? Their debt to income ratio is fine. All right, well, if the appraisal comes in lower, you can still put that same exact money down. It's not going to change anything. But that $10,000 appraisal gap, now maybe it's a 17% down loan instead of a 20% down loan. Still fine. You may have $23 worth of PMI for a little, maybe less than a year. Is that worth it for you? You know what I mean? Is that okay? Then you can still keep that same amount of money, right? So we've been doing a lot of that. We've been seeing a lot of that where people are offering the percentage that they, the amount that they feel comfortable with offering, and then just taking into consideration that could just be part of their down payment, and they may have PMI if it changes their loan to value a little bit. So just another way to thinking of it, because I think a lot of people are they're putting 20% down. They don't have any more than that. Who cares, right? They're putting 20% down. They can borrow up to 95%. So you have 15% of appraisal gap, which would be ridiculous for that to even happen. But you have all of that wiggle room. Yeah, the borrower may have a little bit of PMI for a little bit of time, but PMI is lower now. It's not anything crazy anymore. So if that's the case, you can still keep that deal together. The borrowers can still make that appraisal gap offer just with offering, we're willing to pay $10,000 appraisal gap. You're already putting that down. It's not changing your funds to close.
Yeah. So you're just using the same money you're already going to use, just in a slightly different way.
Yeah, it's the same thing with making offers, right? Like if someone says, I want to put $100,000 down, and I'm like, $100,000 is, 32.6%. Like, cool, that means nothing, right? How about you put $94,000 down and you put 6,000 towards points, right? Because every $10,000 is only going to change your payment by about $50 a month. But if you put that 2 points, let's say it's a 400,000, you put $8,000 towards points, your payment's now $400 less a month. Same exact amount of money. We're just reallocating those funds to make more sense for them. Now they qualify higher. Now their payment's $400 less. Now they feel more comfortable making that offer because their payment's $400 less a month. Like, what could that mean to you? You know what I mean? So those are the types of conversations that your lender should be having with every single buyer, right? You want to structure in a way. If someone tells me like that they're putting some odd amount of money down, I'm going to be like, okay, let's see where this makes most sense and give them those options, because that could be the difference between making it work and not making it work, right? That could be the difference of them feeling comfortable making that offer and not feeling comfortable with that offer.
Yeah, no, it makes a lot of sense. It's being strategic with how you put the whole package together versus just trying to run the same vanilla play or program everybody else has. So
to be creative right now, it's hard. It's a hard market and it's hard for buyers, and you have to figure out the ways to be the most competitive that you can.